Hey guys, Mark McMahon Real Estate. Today I want to talk about taxes and real estate investing and why they go together so well, and how it's almost like the government wants us to save money so that we can provide housing for others. So if that sounds interesting, please hit the like button, please subscribe, sign up for notifications. Allie likes that, and let's dig right into it.
All right, so this is a part of our tax.
Yeah.
Max decided to bring lunch today.
I did.
On Mark's dollar.
Fish bowl for you.
Thank you.
Basically, when you do real estate, I want to make sure no one's listening. There's sauce in there. When you do real estate, as a real estate professional, which is a designation you can get, and that it's a certain amount of hours per year that you work. I'm sorry, I don't recall what that is. Allie, I'll put it in the show notes. Mm-hmm. When you work a certain amount of years of hours a year, you can pretty much write off everything you do. Because everywhere you go, you're going to be looking at property. Every dinner, you'll be talking about real estate, or taking somebody out to dinner that has something to do with real estate. Pretty much everything you touch can somehow be a tax deduction. So, and legitimate. You know, I don't want you guys to go out there and do things that are illegal, but you don't have to. Everything you do is a tax deduction. So we'll talk a little bit more about that. I'm going to get a cart. So today we're going to go buy some stuff that will be tax deductible. Yellow pads, do we? All right. Bonus one for free. Yay. So I'm going to get two different colors. You're going to get Max and I'm going to get Sauce. So Sauce, Max can fight over the green and the red. 5, 1, 2, 3, 4, because they both use these. And I use yellow pads.
Snacks are tax deductible.
Are snacks deductible?
Snacks deductible?
Snacks deductible.
These are actually really good.
What is it?
They're brownie brittle bites.
Okay, go ahead and get those. Are they?
I'm pretty sure they're gluten free.
Are they healthy?
Oh no, they contain meat pie.
Are they healthy? Okay, what can you have here?
Chex Mix. I mean trail mix.
Yeah, but they're individual bags.
So that's probably better, so we don't eat them all.
I'll just eat 2 bags.
Yeah, thank you.
We got how many? 24. 50. We'll get 2. Oh, there's no thing underneath. That makes me sad. Oh, we can have trail mix on the way home.
Oh, good.
Yeah. So agua, and then we also have waters underneath the coffee maker. Oh, we need coffee.
I was back in the other end.
Yeah, let's go back there. So this is basically my computer here. Allie will attest to that. I don't use my computer very often. I just write everything down, and I don't pull the pages off. I just leave them on there, and when I'm done with it, I put the start date and the end date on the top. It's not the best organization, but it works. All right, guys, so just kind of a general primer on what you can and can't write off. Make sure and check with your CPA. And I know there's going to be comments on this. Cool, I'm way cool with that. But these are general rules. Some of you will have different answers. I got it, no worries. But I'll let the comments begin. Anyway, so we kind of took you out, gave you an idea of what you can write off, but here's some other things that you want to look at as far as deductions when you are a real estate investor, a flipper, even a real estate agent. So receipts, make sure and keep all of your receipts. Every single receipt may be tax deductible. You want to make sure, we do it very simply here. We keep all the receipts that come in every month. We put them in a folder, and at the end of the month, we go through them all, and our bookkeeper books them into our QuickBooks. And whatever's deductible is deductible, whatever isn't. That's a decision that the bookkeeper and our tax preparer make. So that's the easiest way to do it, is just put your receipts in. If you're going to be taking someone out to dinner, always make sure and write their name on the receipt. Make sure it's business related. As of 2021, the last I checked, business dinners are completely tax deductible. Previous to this, there was only a percentage of it that was deductible. For 2021, I believe all the dinner receipts will be tax deductible. Dinner, breakfast, lunch, whatever is a business expense. So if you've talked about business, if you're taking somebody out that has something to do with your business, Most of those things are tax deductible. And if you've got a good tax preparer, they're going to kind of let you know which receipts you can and can't use. All right, so the next thing is travel expenses. We travel a lot, and we were in New York. This is 2021, if you're listening right now. And we were in New York 2 or 3 weeks ago with At My Best, Welby. And we went out to look at some real estate that we are thinking about purchasing. And we also spent a few days in the city meeting with some other investors and going out to dinner, and we actually had some fun on top of that. So it was a business expense, and we wrote off the trip because that was what we were out there for, was business. So you can mix business and pleasure. That's another great thing about real estate, is pretty much everywhere you go has real estate, last I checked. And if you are out looking at it and it's a business prospect, which pretty much everywhere we go is, then you can write off that trip. Again, talk to your tax advisor, make sure it's legit. But every time we go to Hawaii, because we own property there, we write off the trip because we're always going over there to work. We meet with colleagues, we look at properties, we look at our properties, and we also have a little bit of fun in between. So that is a business deduction. Furniture. There's fine furniture around here that you see that I've owned for 17 years. Allie, when are we going to get rid of this crap?
Hopefully soon.
Very soon, yeah. Allie hates my furniture. Pretty soon we'll get rid of it, and we will buy new furniture, and we will deduct that because it is a business expense. If you have a home office, your office furniture is a business expense. Make sure you expense it correctly. Again, talk to your CPA, talk to your tax preparer about what is and isn't. But for the most part, your furniture, your shredders, your the stand for your iPhone, like we were in Staples, we've got all this stuff, that's all tax deductible. Everything that has to do with your business is tax deductible. So make sure and deduct correctly. What we call an impulse item for Allie. So a daily planner. Isn't that adorable? But that's a write-off. These are snacks. I always try to have snacks in the office for the kids and maybe the old man too. And just stuff that we need. We got boot camp on Saturdays, so sugar for the coffee, waters. The boys use these pads on a daily basis. Lots of pens. We go through pens. So all this stuff is tax deductible. Everything you see in this whole store is tax deductible. So whatever you buy, even if you don't use it 100% for your business, you can write it off because you need it for your business. So that's another thing. Having rentals means you have a business, which means you have deductions. So keep that in mind whenever you decide you're going to start buying rentals or flipping houses or whatever it is you're going to do. Everything is deductible after that. All right, here's a big one. Vehicles. So the IRS is pretty black and white on how they see your vehicle and the way they expense it, but it's also gray at the same time. So you have two choices when it comes to your vehicle when you write it off. You can either write off the expenses, which is gas, oil, maintenance, I believe payments. Could be wrong on that, but I'm pretty sure I'm right. Or you can write off the mileage. And mileage tends to always be better. We drive a lot in our business. Yuko is using her car part-time for business. I'm using my vehicle full-time for business. And I drive about 30,000 miles a year. So the mileage deduction is much higher, and I write that off. Check with your CPA to see how much it is per mile, but pick the one that's the most and make sure and keep a log. We typically do ours at the end of the year, but there are a lot of apps right now that you can use to actually log your miles so that you got deductions for that. That is a huge one, guys. Another deduction is, I believe it's vehicles over 6,000 pounds, Teslas. Some of the Teslas count, F-150 counts, full-size trucks count. You can actually take that entire deduction in 1 year. Check with your CPA and your tax preparer on that for sure, but that is a huge one, guys. If you need a new vehicle, you can actually write it off the entire purchase year one. All right, so just a few ideas about how you can take advantage of tax deductions as a real estate investor, a real estate agent, a flipper, any of the things that you want to do. The camera that we're using right now is tax deductible. The chip in it is tax deductible. The microphone I'm using right now is tax deductible. You would think that my white t-shirts would be tax deductible. That is another gray area, but you'll notice my t-shirts are not gray because I use bleach.
Great tip.
Thank you, Allie. Allie laughed at that because she rarely laughs at my jokes anymore, which hurts. But anyway, so everything you do, you need to save the receipts for and then go over it with your tax preparer / CPA to make sure that it is or isn't deductible. You'll be surprised at what is. Make sure and check on it because it will save you a ton of money in the end. Guys, thank you for tuning in. Again, if you liked the video, hit the like button, subscribe, sign up for notifications for Allie, and I'll see you next time. Hey guys, check out these 2 videos. They're really going to help you on your investment journey. I'm also on Instagram. Tons of great video content there. Really good stuff. Please subscribe. I'll see you next time.